Shout out to everybody here. My name is Samuel James Price, and every single day I do a live stream, Monday through Friday, 10 a.m. to 12 p.m., and Saturday and Sunday nights at 8 p.m. And every single day I give you Bitcoin updates, live trades, coins that I'm looking at, and more. Find out about new coins that no one ever knew about. We were trading Pepe down at 2,000 to 3,000. That thing would do a 14x almost. 44, I think, was the high. But we were trading it early bird style. So not only do we give you the education to trade, we give you the coins to find, and we give you the news to back it up. So Metamask sets record straight. No tax collection on crypto transactions. Metamask, the popular crypto wallet developed by Consensus, has dispelled speculation surrounding its alleged tax collection from cryptocurrency users. In an announcement made on May 22nd, the company on Twitter clarified that the rumors stemmed from a misinterpretation of the crypto wallet terms of service were grounded in inaccurate information. I woke up this morning and saw that and thought it was absolutely insane. And so that's something also to kind of keep privy of. They say a lot of stuff, but it's not true. It's just absolutely not true. Make sure that we focus on that. You know, we understand those concepts too as well. So super, super important that they're just clearing the air here real quick. Whatever you heard is not true. All right. A tweet went viral drawing attention to the section 4.2 of Metamask Terms of Service, which is interpreted as a change allowing the company to collect taxes. This sparked concerns with the cryptocurrency community as users speculated that it could pertain to their personal income taxes. We reserve the right to withhold taxes where required. A Metamask new update in terms and policy will withhold your taxes, decentralized and dying. Apparently, it had nothing to do with it. However, Consensus swiftly addressed the situation. The controversial tax section in the terms of service, according to Consensus, exclusively pertains to the company's products and paid plans. It has no bearing on the taxation of on-chain crypto transactions carried out by the users. We are aware of the tweet circulating inaccurate information about Consensus terms of service. Let's clarify one thing up front. Metamask does not collect taxes on crypto transactions, and we have not made any changes to our terms to do so. This claim is false. So I just want to put that to air. And that's why this news is special. You might have read that and really believed it. You came to the channel and we squared it away for you. Now you know what's happening. That's super important. Very, very important. Web move to earn app STEPN integrates Apple Pay for in-game purchases. Wow, remember STEPN was hot like 4 or 5 months ago. It made a nice little run. We were trading it on and off to the upside. The blockchain game sees fiat on-ramps such as Apple Pay as a means onboarding the next 100 million users to Web3. STEPN Chief Operating Officer Shiti Magani told CoinDesk. Web3 move to earn game STEPN is integrating payment service Apple Pay as a fiat on-ramp for in-app purchases in a bid to make its app more widely accessible. And that's nice. There's always been somewhat of a discrepancy between whether Apple Pay was friendly with some crypto apps. There's been some battling. There's been some, indecisiveness between the two. I like to see this every single time we warm up to Apple Pay. We warm up to the things that people already use. It's better for the overall crypto space. This is exciting. This is good news. I take it as a very positive. Not a huge fan of STEPN. Not amazing. We'll take a look at the charts in a second too after the news to see if that has an effect on the chart at all and see if there's any technical analysis to back that up. U.S. debt could weigh on Bitcoin's price, some say. The Treasury's effort to build back cash balances after resolution of the debt limit situation might suck out dollar liquidity from the system, pushing Bitcoin lower. As deadlock into negotiations to raise the U.S. government's $3.14 trillion debt limit keeps markets tentative, some analysts have gone against the consensus, warning that a potential deal may bring pain to the crypto market. The U.S. reached its statutory debate. I love FUD like this. This is good. That means the prices will get better and we'll get people to FOMO and sell and act silly, and then we could take advantage of that behavior. Also, we could short the market and make money shorting if that is the case. So this is opportunity all the time. As long as you believe there's opportunity, then there is. The U.S. reached its statutory debt limit of $3.1 trillion on January 19th, passing the Treasury to implement extraordinary measures to run down its Treasury General Account, the TGA, balance to keep the government functioning. That ensured assets like Bitcoin, which are sensitive to swings in the U.S. dollar liquidity, remained bid against fears of government default and the Federal Reserve's continued rate hikes. The TGA balance has declined roughly $500 billion at the start of February to $68 billion last week, according to Macro Micro per Goldman Sachs. The Treasury's cash balance will likely dip to the minimum required to $30 billion in early June, which means a debt deal needs to be reached by around that point to avoid what some believe would be a catastrophic default. It also means that once the debt limit is raised, the Treasury will look to build back its cash balance by issuing government bonds. That may suck out liquidity from the system and put upward pressure on bond yields, as increased insurance would tend to push prices down and lift yields. Bitcoin is known to move the opposite direction of bond yields. Thus, while a potential deal might eliminate major economic uncertainty, assets like Bitcoin have no linkage to the real economy and are heavily dependent on fiat liquidity could in fact suffer. I'll be honest, I'm going to flip the switch on this idea. This is the traditional idea with risk on assets. But another bank collapse and the idea that people want to have their own sovereignty to money, he is not mentioning that. And so I'm not saying he's not true that the liquidity could hold the price down, but you have to remember, Bitcoin is not based on just the money coming out of the United States. Bitcoin is based on international funds and funds from all over the place. With BRICS coming and with Russia probably wanting to do oil deals in Bitcoin, that could even offset the people that are buying the yield. And also, government debt isn't that attractive anymore. I don't think there's going to get as much of a yield as he thinks. So in my humble opinion, I somewhat believe this is a flawed article, which spreads FUD. I like it though, because when there's FUD, it creates good volatility in the market. We got panic sellers coming up. It gives us an ability to short the market, long the market. So from what I'm seeing, I think this is, I'm not saying he doesn't have somewhat of a valid point. It used to be more valid years ago. I don't think he's putting in so much of the macro picture, so to speak. And I think there's more behind the scenes to this article. But again, for some observers, Bitcoin drew haven bids during March banking crisis. Although other rate-sensitive assets like tech stocks also performed as well as traders priced in early, but not as well. The S&P didn't do as good as Bitcoin. Bitcoin went from 16K all the way back to 31,000, basically did a double up. The S&P did not double up. Let's make that really clear. So to kind of couple it in with risk assets and say that too, we've also kind of dispelled that by the charts alone. So, and everyone, there's your news for the day. That kind of keeps us privy to the information, and that's good to know. I really wanted to understand what was happening with Metamask, as I woke up and read the same tweet you probably did, and it's nice to know that that has been fixed and changed. And now that brings us out of the news